The next generation of market data platforms for research and trading. This is an especially fluid topic given the ever-increasing demands of processing the steep rise in market data over the past few years. Moderator Will Mechem is Managing Director of PanAlpha Trading in New York. There, he is in charge of strategy, operations, business development. He has more than 20 years' experience delivering financial solutions to top multi-level investment banks, brokerage houses, hedge funds, asset management firms. Will has built an extensive international network of finance and technology professionals in China, India, Latin America, and Europe. Please join me in welcoming Will to the podium.
So I was just saying I've had 20 years of experience for about 10 years now. Okay. I started in the 80s, so I think I could put 30 on there safely. Are you guys going to come up, or am I going to introduce you and you're going to do like a red carpet here? Give me a moment to get my gang up here. So, for me, the best part about these conferences, swag. We have a very accomplished group today. And I'm going to do it in alphabetical order, and we'll see if it lines up with how they sat down. It does. So I'm going to start with Dave Dugan. Dave joined 303 Capital Partners in 2013 as a COO and co-manager of prop trading. Prior to 303, he was partners in the Buttonwood Group Trading, CTO for Global Healthcare Exchange, and an officer at CME, where he was also SVP and Managing Director. And prior to the CME, he was with Anderson Consulting. Next up, we have Louis Lovas. Hopefully I got that right. Louis is Director of Solutions for OneMarketData, and he is responsible for business development and solutions for quant research and trading. Louis, like me, has over 20 years of experience in financial markets. Prior to OneMarketData, he was the Chief Architect and Fellow of Apama Products at Progress Software. And finally, we have Scott Nichols. Scott was Director of Trade, or is Director of Trading, sorry, for Rotella, which is I believe, a quant shop. Is that safe to say? Focusing on the futures and FX space, a multi-strat shop. And prior to Rotella, he was with Chicago Merck. Okay, that's it. So we have a very broad topic today, a lot of room for interpretation. So what I'd like to do is encourage questions throughout the panel, so we don't have to wait to the end and not give you guys time, and make it very interactive if possible. I believe Harriet's got a microphone, although she doesn't seem to be here at the moment, that she will walk around with. But I'm going to open by throwing a question out to the panel, and like I said, you guys raise your hand, jump in any time, but I'm going to start with one which nobody on the panel wanted me to start with, which is what defines a next-generation data management platform, and what are its characteristics? So, Scott, I believe you said you wanted to take that one.
Can everyone hear me? Okay. Yeah, this was definitely a question that no one on the panel wanted to jump on, because I think that, as I imagine, most of you are sitting in the audience saying, oh, I'm really curious about this discussion. What is a next generation market data platform? We also wondered the same thing, so here we are. I think, again, I'm only going to speak for the perspective of what I do in our firm, and we are a multi-manager, multi-strategy. We trade both derivatives and securities, all in a systematic quant manner. And so the only thing that matters to our business is data. Delivery of market data, mostly pricing data, but some other data as well. And then how do we manage that data and both deliver it in a real-time manner to applications that need to process trading, or how do we deliver it in a research environment? So I think that from my perspective, what's our market data platform? And again, how has it evolved? I guess it's evolved from 10 years ago could be described as simple as, well, how are we going to process data into daily bars and take that daily bar and then feed it to a number of consumers, whether that consumer is a research, risk, trading, both intraday and end-of-day style trading. How are we going to use that data? And now you fast forward and we take data in many different levels of granularity. Both we take book data, we take BBO data, we take tick data, and how am I going to deliver that to, I'd say, 15 to 20 different masters? And that's what we've tried to sort of figure out for our platform, if one would call that. I wish I had a platform internally, if it was something really nice and I had dedicated resources and you work on this and you work on this and you're all resources. In reality, we have a firm of 62 employees, and I would say that by any definition, 40 of them could be described as working for the data platform. And what that means is, well, some people want a higher degree of cleanliness in their data. Some people need mic timestamps. Some people really don't care in their duration of their trades and the way they look at data and the way they process data and the way it's going to feed models and obviously give us, hopefully, favorable results. Isn't time sensitive at all, or is very not clean sensitive. So finding a way to do it, again, with limited resources. We're, in the whole scheme of things, a small company considering the amount of data we consume, and not paying an exorbitant amount of money for it while still maintaining both our research focus and ongoing trading needs. That's, I guess, how I define as our platform.
Thank you. Louis, do you want to add anything to that?
Sure. Just to sort of pick up on a couple of key points that Scott mentioned about, it's all about the data, and I couldn't agree more. Coming from a vendor that delivers or sells and markets a product, is all about data management. And I would guess, to sort of describe it from my point of view, a real competitive advantage comes from understanding data. And I think that focuses on three primary areas. And that's really fast access to market data, because all the strategy decisioning is all around getting access to pricing data, the immediacy of pricing data. Two is about strategy, execution, performance. And that's about measuring broker performance and identifying outliers against benchmarks, defining those benchmarks. So it's not just checking in the case of like TCA or any kind of trade performance measurement. It isn't just understanding how your trades are doing, but how your trades are doing against benchmarks, and then how you define those benchmarks. That all comes from having in effect, a next generation data management platform that can give you the accuracy and quality that you need in a data management platform. And thirdly is risk. Risk and understanding risk better all comes from the quality you get from a data management platform. And to achieve those three things, I think it really centers on two particular key points. One here is about managing scale. Again, talking about what Scott was saying about all the different groups he has, up to 60 people, all have, in effect, work in the data group, but what they're all dependent on is the ability for a data management system to manage scale. Whether you're looking at level one equities, the futures market, or Oprah, which is just an absolutely gigantic fire hose of data, you really need an infrastructure that knows how to scale and manage that accordingly. And secondly, and probably more importantly, is that data management platform have an eye on the solutions. It isn't just a vanilla storage engine and then all the usage or the solutions, the business value that you derive from that is left as an exercise to the developer, the trader, the quant, but that the data management platform has built into it a key understanding of financial data, trades, quotes, book data, what it means to do back testing and sort of test out those what-if conditions, but given a confidence that the data that you're pushing through algos to test has the accuracy, the applied corporate actions, the cancels corrections, the exchange calendars, all inherent in the database, in the data management platform itself. So I guess to me that the next generation data platform sort of focuses around those two key points to deliver the accuracy and the quality of data to the trading people, to the trading desk, to the quants, so that they can confidently move forward with algo development and backtesting.
Okay, and actually that's a really good segue. I'm going to throw one out for Dave here. Dave, what are some of the changes happening in terms of the types of market data, quantity of data, et cetera, that are creating challenges and opportunities in terms of the technology, i.e. multiple asset classes, international exchanges, et cetera?
Yeah, I mean, I'll maybe I'll follow up a little bit on that last question too. So our evolution's been 4 years ago. It was a little bit easier. I think we predominantly started out as a futures-based firm. We cared about A/B arbitration on the CME data. We cared about collecting all that data, make sure that it was high integrity, and then making it accessible. We had to make it accessible across the range of quants working in different tool sets like MATLAB and others. And that seemed to be a fairly straightforward challenge. Then, of course, we got into multi-asset class. We had to deal with equities data and FX data and data that was coming up from Brazil and Sydney and from all kinds of different markets. So the data storage became larger and fuller breadth and whatnot. We were doing more cross-asset trades as well. Now you took that data and you expressed it in a variety of different venues, from minute bars to second bars to daily bars. And inherently came along the very sophisticated PhD quants. And they were doing microstructure analysis, and they wanted tick data that was so precise, and then they had arguments over how precise was the tick time sourcing. So we partnered most recently with Pico Quantitative Trading, so that's an endorsement if you want to call it that. But we found that we could get our needs met with PTP, precision timestamp protocol across all the major co-located sites that we were interested in. And PQT was also growing across Asia and other markets right now as well. So a lot of the challenges were along the way were cost effectivity. You build up this big repository of data, and you embrace technologies like HTML5 and PTP and a lot of data storage, and you evaluate things like cloud computing versus private cloud or private storage. And we've gone through the whole gambit, I guess, of challenges. And the main point is that technology costs are rising in some areas, but they're declining in others. And I would just encourage the audience to partner. I mean, we had to partner to really gain scale economies, and it's helped us, and I'm sure it'll help you too. And we are open to partnering as a company with anyone. So.
Thanks. Sure, jump in.
In the previous talk, Chris doing a keynote talk was kind of talking about sort of really strong technology people when it comes to sort of building out exchange matching engines, for example. And it sort of sparked me into think about this question, not so much about what types of trading firms, but what types of trading firms underestimate that effort. And I've, being a vendor and seeing a whole array of different types of firms, quant firms, the buy-side firms, asset managers, they're looking to understand data better because it's really a game changer. But I think the flip side of that is that firms that underestimate the effort and the investment needed. And to that point, last week I was just at a small startup firm, and they had a real strong, intelligent quant, right? And those typical sort of rocket scientist people have a background in computer science, mathematics, and finance, and they have that sort of sense that they can build everything. And I think to me that was Chris was referring to earlier about those real strong technology people. But I think what they miss in understanding data management is that it is a key investment, but a really difficult one to tackle yourself. So it really sort of borders on that build versus buy kind of decision criteria that if you're just coming out of college, I don't think you really have the experience, and that's what Chris was kind of alluding to before, that you really need sort of a few years in the market to understand where are the key points that I should focus on in the firm and what should I look to buy as well.
Great. So it's kind of a good segue into this. I kind of should have cut you off halfway and it would have been perfect. But would you say, this is for Scott, I'll start with, would you say there's a convergence of technologies happening now behind the data management in terms of analytics, low latency, cloud, et cetera?
Sure, I'll jump in on this one. I kind of, again, this segue complete. What we struggle with sometimes is, which would come into, obviously I have low latency data needs, I have data needs where latency isn't that important. We're not really counting mics unless it's coming down to true like MicroStrategy research, but the availability of the data. How much data do I want to keep in a fast, accessible state at all times? Because that's where the expense lies. Maintaining, in our case, we maintain 2 data centers that obviously have to be up at all times for trading and research purposes should something happen to one or the other. And so you can imagine the expense of mirroring massive data sets across multiple SANs, which aren't cheap, and keeping all that data. So you look at the cloud side, you're like, well, how much data might someone need to access quickly on a daily or a weekly basis? And then how much am I going to impact them if I was to say, listen, I'm going to push everything beyond, 6 months out into a cloud-based solution or a slower storage solution? Is that going to, does somebody then come to me and say, well, it takes me 9 hours to run my simulations, and so you're really impacting our workflow, and this doesn't work for me. I need it fast, I need it there. But as you can everybody knows, I'm sure that they're sitting here listening to this, that having massive data sets, including book data, fast accessible to everyone across using multiple storage techniques and multiple platforms accessible by multiple languages isn't really doable. It's doable for some firms, but at some point you run into cost. And I think that, speaking specifically of low latency data, we have had a low latency experiment, as I like to call it, for the last 2 years, exploring some strategies in that space. And as I said, I spoke on a panel last year, and I think I told these guys earlier, is that, whatever the challenges that you've approached in this, I said, ultimately, I believe in partnering up as much as possible. I really do, and that would really be helpful to us if you let me do month-to-month contracts. If I could make a 30-day commitment to all these really exciting technologies out there, especially on the cloud side and everything else. I'm interested in it, but I will certainly find out in 13 months if I don't like it anymore. And then I've committed to 24 months for varying vendor contracts. And so that's what we get down to, is how much money am I going to spend? Because a lot of these, we do a lot of what I call white tower research. We're looking at something, it may in fact pan out into a viable trading strategy, but I don't know if I want to spend, $750,000 a year making it fast, accessible, and committing a ton of storage to it and committing a lot of research to it if it doesn't work out. You still want to do it, but it's a question of how much resources you're really going to throw at that. And therein lies the problem, I think, especially in the low latency space, is that with budget of no object, or if that is your core business and only your core business, you do it. And that's just the way it is. If you have sort of a multi-strategy model, which some of our peer firms run into the same situation. It's like, well, 1 style or 2 style, 3 styles trading pay the bills, but we still want to do this. How much do you want to commit to? Because it really is always a 2 and a 3 year commitment, both in the software and the hardware and the relationship side. And it starts to get expensive if nothing pans out.
Is there anyone who'd like to ask a question from the audience? Okay, well, Dave, how about one for you? Would you say data is becoming more complex and harder to extract information from, or is it becoming easier, more standardized, and less expensive, therefore easier to derive more value from it?
Can you repeat that?
Sure, and I can also throw it out to the group here if somebody else wants to take a swing at it. Is data becoming more complex and harder to extract information, or is it becoming more standardized and less expensive to maintain and therefore easier to derive more value from it?
Definitely more complex. Well, first of all, just the whole unstructured data is becoming more and more problematic too, and it's difficult to sanitize that data, whether it's accurate or not. So, and we're all seeing the consequence of that when we see a tweet that comes out and roils our market, and there's no legitimacy behind the data. So, it used to be the case. I was a Merck officer between '96 and 2000, and I was proudly a part of the genesis around developing fix for the futures industry and then giving it away to all the market participants, including the testing programs. And at that time, my board was very supportive of that, and I thought that would help espouse standardization across the industry. But of course, as we've all seen, that technology was, even though it was self-describing, extensible, and had a lot of merits, it has kind of gone by the wayside in favor of now fast fix, but also mostly binary protocols. So you have all these different heterogeneous binary protocols, and inherently I think we've gotten a little bit better over time because we use the same mature, stable programming teams, or at least we try to, and we get a little bit better on the parsing and processing and integrity checking and all the rest of the stuff that goes with data management and data interpretation and data integrity and data exports and data accessibility and all the rest of the problems we have to deal with. So, but no question at all, because we're dealing with a margin compressed industry, we're reaching out into more and more markets, more and more liquidity venues, and the markets are fragmenting. So we're dealing with 60 exchanges and more in different markets in Europe and the U.S. equities markets and so forth. So when you deal with that, it just becomes more and more complex. And I think that's where the buy, build, blend analysis kind of comes up, and it says, we can't possibly keep up with this without partnering. And so a lot of us that had thought we could build internally and meet our needs are now having to look externally to at least parts of the solution. So I would say definitely more complex, and continue to head in that direction.
Okay. Anybody want to add to that?
Sure. I think what I would add to what you're saying, Dave, is financial tick data management is well beyond storage infrastructures and feed handlers. And data management is really a centerpiece for the trade life cycle, and I think that's really what you're kind of driving at, from things like alpha discovery, strategy development, back testing, risk compliance, post-trade reporting, TCA. I think it sort of cuts across all aspects from beginning to end of the trade life cycle. So it all sort of centers around data. And there's clearly demand for the sort of that normalization, uniformity of that data, from dealing with the vagaries, the uniqueness of different sources of equity data. Just looking at all the different exchanges, whether domestically or geographically or internationally, all the different geographies. Just trying to normalize that data, make it uniform, so when you want to play it back or do any kind of quantitative research, you're not worrying about the uniqueness or differences in how one exchange happens to map tags or particular codes for different aspects of the actual data beyond price and size, for example. So creating a nice uniformity across that, I think, is pretty key, and moves it well beyond just storage architecture and feed handlers.
So, Louis, what about unstructured data like news, blogs, tweets, etc.?
Yeah, well, I've said before, and we were talking earlier about this, one of those whole areas that I think, especially sort of kicked off by that AP Twitter hash crash, has made everybody sort of sit up and take notice. And being as we're a data management vendor for financial data, this was certainly of interest to us to understand where the market was going, relative to what our customers, our existing customers, and what the industry at large is thinking and how they're reacting to social media data in particular. So to that end, about a month ago, we formulated a survey and did a survey of the industry at large across all of North America, Europe, and Asia. And I'd just like to share a few of those results with you. It was a list of 20 questions, and some had a yes-no response, some were sort of what you think of this particular thing. And there were 4 I thought that were fairly key that I wanted to just describe to you and tell you how the results were, the respondents. So the first one I'll mention is, do social media news feeds impact financial markets? Simply a fairly basic question, somewhat of a self-evident answer, but it's also good to get some validation of that. So 56 of the respondents said yes, most notably in the equities industry as compared, or equities market as compared to other asset classes, where that social media feed, the impact, what was the most important one was Twitter, that was over 80%, as opposed to things like LinkedIn and Facebook. Second question that I'll share with you is, do you currently use social media to inform your trading or investment decisions? 47% no impact on the decision process, 34% said they were skeptical but researching it, and 18% said yes. So there is, a increasing, in my view, group that is now starting to look at and actually using social media in their trading decisions. There's one more question, or 2 more questions. What would you consider the most effective way to manage, process, and integrate social media data? And this is more of an infrastructure question, not necessarily anything sort of up the stack in the trading logic, but 56% said they would use the cloud. right, as opposed to try to bring that into their own data center infrastructure or whatnot. So they were sort of focused on, if I'm going to do this, I would definitely look at, the scalability come from cloud storage. And lastly, and possibly the most interesting one, is what do you see as the biggest obstacle toward integrating social media with trading or investment decisions? And overwhelmingly, or 62%, said the potential for false positives. So I thought that was rather a good way to see that what people were doing with social media, what direction it's taking from a vendor, our company's sort of long-term strategic decision-making, how we might want to integrate social media data with financial data to see if there is a true market out there, or is such things as, is it a trailing indicator, is it a leading indicator, is social media information already priced into the market? It was all sort of questions all around that.
Yes, please.
I just have a question. Maybe I missed it in the beginning. Sorry, my phone was really loud. I may have missed in the beginning, but I'm just curious of what type of traders were you reaching out to, more institutional or retail side when you did this survey?
Oh, certainly not retail. It was cut across institutional and the quant market and HFT. And actually one of the questions was, do you, and I didn't include it here in what I was going to share with you, but I remember it specifically, is in what particular trading style do you think would be most impacted or benefit from, I should say, social media? And it was pretty much a 50-50 split between more low latency trading styles and sort of the long-only investment decision. So I was a little surprised that both of them saw that as equal benefit. If they were to adopt it, if they were to use it, that it was pretty much equally across those two trading styles.
So I think we're going to go to questions, but I just want to ask the panel, is there anything you guys want to add? Tweets, blogs, twits? Any thoughts?
No, I have a fairly dim view on that type of data, so I'm not going to comment on it.
I just want to give you the opportunity. So I guess we'll open it up for questions. I guess we did our job. You guys are completely enlightened, educated, and all right.
Great, we'll leave it there. Thank you very much, the panel, and thank you for Will for moderating.
Thank you.